Hey, it's Mack with PriceActionTradingSystem.com, and it is Thursday. It's February 4th. This will be our last chart lesson for the week. Probably won't do one tomorrow. I know I said I would start back on Fridays eventually, but I've really enjoyed taking the Fridays off and getting a 3-day break. Really, it's this takes me about a little over an hour each day, so a lot goes into this. So we'll see. Eventually, I may start doing them on Friday, and I may just do them randomly on Friday if I happen to be in the office or the weather's bad or whatever. But for now, I'm kind of enjoying taking a day off, and probably going to continue to do that for a while. It just gives me a break and keeps me from getting too burnt out on it. So, but anyway, we'll do today's lesson, and you can see it's just a. It turns out it's just a trading range. There's a two-tiered channel that was working up when we got a break, and we tried to go higher, but we never could. We just kind of continued to go sideways. And you can see all day long, look how prices swing above the EMA, below, above, below. And we had a little bit of a trend here, a little bit of a trend here, and then above and below the rest of the day. So, but in the big scheme of things, we really had a little larger trading range. And you can see the highs are right across here where they were the previous day. They didn't, they, we didn't spend much time there, so they didn't really come into play a whole lot. And you can see there's some lows across here. They're really probably right across there, but we kind of pushed below them a few times. But anyway, in the big picture, it was a range. You didn't really need the lows and the highs. They didn't come into play enough. You just played the shorter term trend lines. You were probably in pretty good shape. So, but let's back out and we will talk about the trades. And I'm going to wrap it up for the week. But the website is back up and running real quickly. We finally got that resolved. Hopefully, we're good to go. I'm probably going to look for a different host and maybe upgrade and get a little different type of hosting going forward. I'm just not real pleased with the way they did me and how long it took to fix a simple problem. Um, Actually, what ended up, just briefly, it doesn't really matter, but what happened was, um, for some reason the website had some issues with one of the databases and it was causing a lot of excess usage on the server there, and so they just limited the account where I couldn't access it. And they asked me to look into it and fix it. We did that, and then it took them a day to get back to me to approve it, and then it took another day to take the limit off. And then after they took the limit off, they had actually put a password on it. Some of you wrote to me and asked me about that. You were trying to get in, and it was asking for a password. Well, the reason for that was to keep people out, while to keep from running their, too much server usage. But after they took the limit off, they forgot to remove the password. It took me another 10 hours to get them to remove that. So it was just totally ridiculous. You call into their customer service and put you on hold. It takes an hour to get through, and then they tell you they're going to do something and don't do it. So it was a little bit of a fiasco for me. But needless to say, um, we've got it fixed. We know what the problem was. I know how to keep it from happening again, but I'll probably still look for a new host and probably upgrade the type of server we use. But uh, when we do move it, it'll pretty much be behind the scenes. You won't even know the difference. So we won't have to take the site down or anything again to do that. So. Uh, but anyway, that's enough on that. We're back up and running. Everything seems to be working well. And while it was a headache, we got it resolved. So let's back out, talk about the trades, and we'll go from there. I'll make this a little bigger. But when I came in, we were working downward in this trend right here. That's more of a short-term trend. You probably could find another trend right here. And that might have led you to take this short here if you saw that. But I don't like that. It's a little bit congestive. You got to go short. It's just an up-down bar right into the uh, EMA. So even with the trend line, I really don't like it. and then we got a break. And we never could make a new low, though. I think the bigger trend, I mean, this trend was pretty obvious right here, and I think that took precedence at that point. And so I never really paid any attention to this other one coming down here. The play was off this shorter term one, and you can see it's holding prices nicely. We get a two-legged break right there. There's one leg up, correction, second leg up. And so, but the main thing is we had a little bit of a double top right there. You can see we pushed one tick higher, turned out. It didn't close really bearish, but I still like this one simply because there's the trap, there's the double top, there's two legs up. You probably would have wanted to wait on let this break lower and maybe drop a limit order or a tick or so back in there just to offset that, because it's not a really strong bearish bar, but we're looking for a new low anyway, and turns out to be a nice trade. There's enough reasons here to take that, take that short. It's not really aggressive. The only thing that keeps it from being a perfect setup is there's just not enough. The bar is not bearish enough. It's got a bearish slant, but there's some it kind of closes a little higher off its low, so sometimes that can be concerning. So, but if you read it properly the way I just described it, nothing wrong with going short there, but I'd probably use a limit order and try to get a little better entry. Noticed it took off pretty quick, so if you probably wouldn't have got filled, but maybe a tick or right at the bottom, or maybe a tick in, depending on how and you may have had a good bearish bar here. And people ask me that all the time. I've been getting we got a lot of new people that have started stopping in, but your chart is never going to look just like mine. Even if you use a 6500 volume, which is what I use, and people ask me about the tick charts, we didn't just change. We changed for a reason. They changed the ticks at one point, and so we didn't trust the ticks for a little while, so we went to the volume, but they've since corrected the tick problem. Most of your tick charts are going to be just fine with your, brokers that are trustworthy, that have good data or whatever. And so if you want to go to the tick chart, that's fine. You can use a 2000 tick chart, or you can use a 6500 volume. And just to add one more piece to that, some of the tick charts, depending on your data provider or your broker, might be slightly different. So a 2000 may not look like my 2000. They're never going to look exactly alike. You should have a similar number of bars, and this pattern should be the same, but your bars themselves are going to look different, because you can't start the count at the exact spot, and it's impossible to make them look exactly alike. You can get them close, but you can't make them look exactly alike. And sometimes people have a really hard time understanding that, but tick and volume charts are not static like time-based charts, and they're never going to look exactly the same. So sometimes these trades will look better on my chart, other times they may look better on your chart. I generally only mark them based on my chart, but something like this, even though that's not a perfect setup, it's close enough that where you might have a decent, a nice bearish bar, or a real small bearish bar up here or something. So nice setup, and then it bounces, of course. Of course, you got your break and you low, and now you're trending in the other way. Just wait for that reversal pattern. Notice we got it. We go right through the EMA. We pull back, and there's a failed second entry short right there. Notice the new low, pull back first entry, pull back second entry. And it actually doesn't break lower here. It actually breaks lower. Actually, I could have sworn it broke lower right there. But anyway, you can still count that. It's close enough. Pull back for it's a first correction, and then it goes higher and it pulls back, and there's your second correction. I could have sworn I saw it break lower there earlier today. But it doesn't matter. It's still the same pattern. And we push right through the EMA. We pull back right at the trend line, EMA, and it fails. Just go long right there. And it's similar. It's basically a breakout pullback long as well. But what would probably happen is a lot of people probably get tricked short right there, because there is some resistance there. So you got to be thinking about that. But you've got your reversal. You've got your break and a new low, and then you went through the EMA and you pulled back. And even though it doesn't tick lower on my chart, it could have on yours, and it's real close enough. That's your trap, and look at it take off. pulls back, and then you get a little failed second entry short here. Notice it pushes down once, it pulls back, and it pushes down again, and then it turns up. So I like going long right there. Looking for it to make a new high. Quick, easy move, and it does just that. It makes a new high. And then we're heading off. And we talked about why I didn't like this short here. It's an up-down inside bar. There's 3 or 4 bars stacked up there. It's kind of congested looking. You got to skip that. But you get another chance to enter down here. Notice that new high, pull back first entry, pull back second entry. And even though it's a second entry that would have worked on a scalp, you still treat that like a failure. We're looking for it to test the low after the break of that trend line. So you're looking for it to go lower. And that's a big bearish reversal bar. That's a nice bearish bar. Just go short 1 tick below that and look at it go. And then it bounces down here. So draw your trend line. And we do have a break here. And this is a second entry long. But notice all that stacked up there. You could almost treat that like a failed break lower. So if you really wanted to be aggressive, I like that for a long. And we talked about it, I believe, yesterday, that sometimes you catch those and you catch the low of the day. And I'm going to make that one green, though, because it is a little aggressive. But you catch the low of the day, and you would have indeed, although your runners wouldn't have made it on this. That's the low of the day. Now, if you catch this one, you catch a runner. And there's some others in here you might catch a runner. But anyway, turns out to be a nice move. And then you pretty much make a double top. And this is a repeat pattern. It looks very similar to this over here. And you get your break, move to a new high, you pull back, you turn up, and you get a big bearish bar. And there's resistance now all the way across here. You can start to see the resistance across there. And this is really a double test of this high. So it's the double test rule. It's a breakout. Notice that there's matching lows right across there. And we tick lower and come back. So it's a breakout, pull back short as well. So there's a couple of different reasons to like that one. Where does it bounce? It comes down here and it confirms the trend line. And notice what I really like this setup. Notice that it bounces right off and turns down. And look at that bearish bar. If you know what's going on, you know you can't go short there, but it takes 1 tick shorter. They trap people right there. I guarantee you. It turns and goes right out the other side. You could go long with a stop and have it right above that, or you could wait on this to finish and put your buy stop right there. Either way, you get filled on that one. It takes off like a rocket, and any runners are safe, and you can just keep riding that one. And notice this is a new low right here. It's lower than that swing low and that one. And pull back first entry, go higher second entry, it fails. That's your failed second entry. We're way above the EMA. This is a reversal pattern, go long right there, and that's a quick, easy move. And again, any runners would have been safe. And you're kind of going sideways here. Somebody sent me this and asked me about this trade, and they asked me about this one. There's not much room to get out on mine. Their bar was much lower, and so I liked it on his. I didn't mark it on this one. It probably could be green even on my chart, but there's not a lot of room. But we did trade up into this, so we're probably going to be successful if we break out to the upper side. And we did kind of successfully break out, but we still ended up not going much higher. Depending on if you had the only way you can make this one blue is if you can get in far enough down that you can get out before you get up to the highs. And the highs are really here, so it's really close even on mine, but I still would have skipped it. I like to use the closes, so you had to be careful on that one. But if you had the right setup and if you want to be aggressive, still a couple of reasons there. But notice what happens here. We break out. We pull back. We almost always come back and retest these breakout areas. And look what happens. We come back. I didn't like this one simply because actually this broke lower and turned and went out the other side. And it is a second entry. Notice we're working down. You get a first entry, pull back, second entry. But this is all really one move down. You can see that. That so you needed to wait on your second entry really over here, and you don't get one. You actually could treat a break above that because of the matching highs, but it never ticks lower. It doesn't tick lower till here, and then when it went higher here, that's the second entry I would like, but it's right into the resistance there. And you get a couple of other, it just kind of, you would have just got chopped to pieces here either way. If you went long, then it turns down, you go short, then it turns up. And so you had to be real careful. But when we double tested that area again, we really kind of triple tested it there. You almost could go short right there, but I think you needed to wait and see what happens, and then you get this big bearish bar, and you've pretty much got, notice that trend line off those three bars, so you pretty much got a trend line there as well. So I liked that one because of the big bearish bar closing when it's very low, and it takes off. But you could have entered here as well. This one is real tempting. Um, I just didn't think you really had a good enough trap, but when it went lower and then turned back up and then turned down again, you can tell they trapped people because look how it took off, and all those people had to start exiting. So, but really you could have entered here as well. So I'm going to go ahead and make it green, but it's a little more aggressive right there. But you definitely don't want to go long into all that resistance there. And you're short, you've got a little resistance here, but your big one's down here, so you got enough room. This was really your last swing low right here. Off it goes, and then look what happens. You get a second entry short. There's a new low there, pull back first entry, pull back second entry. There's a second entry short right there, but we haven't got back to the trend line. We haven't got back to the EMA. But you get a little close outside and a move to a new high right there, and then so you got a double top right, and that's right off the key entry point, the trend line. So I like that one, and look at it go. And of course, then you're right into the your bigger, longer term trend line right here. That's the one running right up through here that we talked about earlier. And notice how you tried to go short there and then get that little trap, and it's bouncing right off of that. So it's probably going to pull back at least to the EMA. We don't have a break of this trend line here, but this is the more important one, and this is that key entry point. So when it ticked lower there, then turned back up, I liked it. It's a real small bar, so it's real low risk entry there. Even if it turned up here and then traps you, it's still real low risk. And it was an easy scalp. You didn't get anything else out of it. But then it kind of makes a little trap here and goes down, but you can't go short, right? It would have worked, but you can't risk that and go short right into that trend line there. And notice that's the first break of this one. So all this worked out real, like it was supposed to anyway. And that's a big bearish bar, but you just can't go short right there, right into that trend line. So you got to skip that one. And then you get your failed second entry short right here. Notice you make a new low, pull back first entry, pull back second entry, and it instantly fails almost and goes the other way. Just go long right there. We didn't quite close, push through the EMA, which you would like to see that, but it's still enough reasons. You've got your first break of the two-tier channel, so you're looking for a retest anyway. And this one takes off and turns out to be a pretty good trade. It doesn't make the low of the day by any stretch of the means, but it takes off here, and you would have caught a runner right there as well. And if you just took it until you got that first break and the bar lower, there it is right there. That's about a 6-point move. So not bad, and you would have caught a runner there. This one is a little, I did mark this one green, and the reason being is because we didn't push through the EMA, and it sometimes can be a little risky going long right into that EMA like that. But there was enough reason in here that if you want to be aggressive, you could take that one. It's a trap, and so it doesn't have to be a perfect signal bar or anything. And then, of course, you get a two-legged pullback, And look at that nice bullish bar that confirms that trend line. This one really kind of confirmed it because you got your two touches, but now you know for sure. And look at that bullish bar. Just go long right there. Another quick, easy scalp, and then pull back first entry, pull back second entry. And notice how we're getting back inside the main trend line. It's holding. The EMA is holding. I'd definitely probably let that break higher and drop a limit order, but you really didn't have to. You could still go long on the stop. It's a failed second entry short as well. Notice this is a new swing low from here. Pull back first entry, pull back second entry. So for that reason, your signal bar doesn't have to be perfect. Nice move. And this is really a repeat pattern here from this over here almost. I think we saw it somewhere else too. I can't remember. But where was that? Right here. Similar to that one. There was another one somewhere similar to that one and that one. So it's a repeat pattern. It happened several different times during the day. And notice you got that resistance, and you get a first entry, pull back second entry. And that's a big bearish bar, but you got a combination of the EMA, the shorter term trend line, the longer term trend line. So I just don't think you want to go short there. If you let it break lower and you drop the limit order back in here far enough back to get out before here, maybe. But even then, I don't think you'd have got filled. I'd want to get filled at least halfway back in that bar to be sure. So I think you just got to skip that one. Plus, look, there's a lot of congestion, but I still like it somewhat because of the repeat pattern. And that would have been a nice move, but I'm really not going to mark it. I just think it's too risky. And we're moving down, and then, of course, we come back to the other side of the trend line working there. This is just a midline right here. Usually like to make them a little lighter so you can tell. But pull back first entry, and then we try to go higher, and you get a couple of matching lows there, so when it breaks below, you can treat that like a second entry. We never could get that little push, but notice what happens. You set your trend line off those first two bars, and then you come back and test it again. So and that's a bearish bar. It's right off that trend line. Now you got a confirmation of it, so I like it. It's good for a scalp, but then you don't get anything else. Then we just kind of go sideways here and into the 2 o'clock hour. So I didn't mark anything else. But really a good day. A lot of trades there. I commented with another trader. We laughed about it. He said, it's amazing that we only close up. I think we closed. Here was the close yesterday. Where is it? Right here, about 1907 or so. And today we closed at about 1907. So we probably didn't close up within 2 or 3 ticks. But yet look at all that movement. Plenty of opportunity to make money. So good trading day. And that's about it for today. So again, I'm going to wrap it up. Probably won't be a chart lesson tomorrow. But we'll be back again to do it Monday. And in the meantime, if you trade tomorrow, remember the keys, those key entry points. That's what you're looking for. You're looking to enter off the key entry points. Where are the key entry points? Strong support, important support and resistance, and that can be trend lines, the EMA, and horizontal support and resistance. So that's about it for today. I'm going to wrap it up. We'll be back again to do it Monday. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.